everyone, and welcome to UBS Trending. I'm your host, Anthony Pastore. As investors watch the tape every day with wild swings in both equities and rates, it's difficult to get a grasp on what's really moving markets. We're going to break it down today with my guest, Michele Schneider from MarketGauge.com. Michele, such a pleasure to have you here in the studio. Great to see you.
Oh, it's so wonderful to be here. Thank you, Anthony.
Thanks, Michele. So listen, I know we get you in here every couple of weeks, and there's always something really interesting to discuss. Today happens to be we just received the print for CPI, came in at a rise of 0.6%, which was above expectations and really does indicate that inflation is not really going away anytime soon. So I wanted to get your thoughts on where you think most of these numbers, where is this high inflation coming from? Is it gas prices? Is it food prices? And what do you think we will see going down the line? Have we peaked here, or is there more ahead?
Well, the bulk of the rise in the prices really stem from, I'd say, both food and gas. As we know, over the last weekend, which was Mother's Day weekend, so that made a big splash all over the news, that gas prices were at record highs in many places, paying well over $6 a gallon. And then food, not only is it costing so much more to eat, but what many companies are doing are actually shrinking the size of the quantity, but charging you the same price as if they were giving you more. And this is going to continue because we still have a lot of problems coming from the Ukraine-Russia situation. Obviously, we also have our own supply chain issues. China's still on lockdown, but starting to emerge. That will put new demand on. And then in terms of food, we have something that nobody can control, and that's called Mother Nature. And at this point, where I'm from, New Mexico has fires all around, which means we could see California having a rough summer. Drought is still very prevalent throughout the growing regions. And we already know the crops that have gone in, particularly in corn and wheat, are still subpar of what they should be, and that's without a summer potential disaster. So, yeah, I don't see any great slowdown in these prices, and a lot of it is coming from the fact that before COVID, producers really cut back on their production of goods because prices were so cheap. So all of this has come home to roost.
Right, which probably will keep the Fed on a pretty aggressive path of tightening. We know that the Fed last week, Jay Powell and the Fed raised rates by 50 basis points, but we've had a lot of other Fed members, Loretta Mester being one of them, she of course is the Cleveland Fed president, saying they could go 75 basis points next time, which in my mind it seems like it's very aggressive, but given the print on CPI, it almost seems to make sense. But do you think the Fed is being too aggressive here, or are they really doing what they feel they need to do to curb this inflation, the rate of inflation that we're seeing?
I think the Fed is still well behind the eight ball in terms of raising rates. In 2021, they had a great opportunity as prices were coming back to raise at that point, and they didn't. So now they're trying to make up for that lost time. But yet at the same time, they have a real other problem because they don't want to drive the economy into a recession. And even though we've seen growth from COVID, which is understandable considering we were basically at a standstill, it really begs the question, where else are we going to get growth from in the U.S. economy? And so there's so many things going on, including right now Biden talking about maybe lifting the tariffs from China because things are cheaper getting them from China. With the U.S. dollar so expensive, our trade deficit keeps widening. So it goes on and on and on that the Fed has to kind of figure out at this point and do this really delicate balancing act. So I think the simplest way to explain it is watch the long bonds. We know the yields rose very rapidly, and that sent the TLTs, the 20-plus year long bonds, into a skid. However, a couple of days ago when we had that massive sell-off in the stock market, the TLTs actually started to rise, which means the yields started to fall. I think today is going to be a really interesting, when I say today, I mean after CPI numbers, will be an interesting pivotal day to watch what happens with those yields. Because right now they have not been a flight to safety. If they become a flight to safety because literally people are so scared they don't know where else to go, then what is that telling you? That they don't believe the Fed really has control, and that inflation will probably go even higher. And that should bode really well for a lot of these commodities, particularly precious metals, that have been sort of floundering here in the last several weeks.
Yeah, and it's interesting, when the CPI number came out, yields initially fell about 7 to 8 basis points on the 10-year. So yeah, absolutely, certainly watching the rates here. I wanted to ask you because we talk a lot when you're on with us about the commodity side of the market, and you did mention the word recession. Our CIO here thinks that we are not in danger of any kind of recession this year, perhaps maybe next year, or even 2024. With where we see energy prices, where gold is trading, which is usually a flight to safety, do you expect that there may be a recession on the horizon?
I would actually agree with the UBS analysis on that. I don't see a recession on the immediate horizon. Of course, we can always have terrible monetary policy and drive us there. But right now we have a very interesting labor market. Not only has it been strong with the latest numbers that came out, even though the participation rate is down, we have this really interesting situation where there are 11.5 million jobs still available. So if people want to go to work, they can.
They can.
Will they? That remains to be seen.
Right, the Great Resignation is still a factor.
More people quit their jobs in the last statistic as well. So this to me tells me that people either are already working or want to work or have enough money at home to not have to work. Mm-hmm. And that really, to me, is the biggest driver of recession, is what happens in the labor market. Now, there is talk some companies might have to fire people, but I think I'm not worried about that yet. Mm-hmm. So we'll see what happens. But yeah, recession kind of on the back burner. Stagflation, we're here. Mm-hmm.
Yeah, exactly what our Chief Investment Office thinks as well, Michele. What about on the energy side? We've got crude hovering around about $100 a barrel. We've going all the way up to about 130 or so. Where do we go from here? What are your expectations for crude?
Well, we've been chopping around. I think $95 a barrel has been the most recent low. 130, as you just said, has been the most recent high, and we're sort of hovering between 100 and 107. So if we just look at it from a technical standpoint on the chart, you can actually see the choppiness after the peak, but you can also see the support. So it's going to be a matter of where the price gives. Is it going to break down under 95? And of course, you have to say, what would be the event to make that happen? Mm-hmm. Seems kind of hard to fathom at this point. Much easier to fathom the idea that maybe if we get back over $115 a barrel, we won't stop at 130 next time. And it's really kind of a scary thought to think what would drive it past 130 to some of the predictions of 150 or 200. Shudder to think about it, but people at least should be going in with their eyes open.
Right, because look what got us to the 130 in the first place. It took a war in Ukraine, which is a horrific humanitarian crisis to start. But then, of course, you see this spike in energy prices. So, yes, I agree with you. It would be really terrifying to understand what might cause us to go to that next level. Thanks, Michele. And before I let you go, right now, you're trading, and there's a lot of volatility, particularly in equities and, especially in bonds. Where are you seeing opportunities right now?
Well, interestingly enough, I talked about China for a second there. I think China is an opportunity. They actually have been ahead of us in terms of monetary policy. They tightened in 2021. And because they've been on lockdown, they've actually started easing. And so their particular ETF, which is FXI, did not make a new low with the SPY recently. They made a new low back in March and have been holding. So I think there's opportunity there. And I still think the best opportunity really is to stick to commodities. They're in a super cycle. Even with the latest downside move that we've had, they've held support. Gold in particular is holding support. As we just talked about, oil's in a range. Some of the soft commodities, wheat still been very strong. Sugar is just held support. So I think you've got to focus really, for the at least in the near term, in the commodities market. In terms of equities, we can see that when there's a liquidity event, everything sells off.
That's right.
Nothing is safe. So until we find some kind of footing, we're sort of staying mainly out of the equity space, except for a couple of exceptions that have to do more with consumer staples.
Terrific. Michele, thank you so much. Love getting your insights. So happy that you joined us here in the studio. Welcome to the city which you grew up in. So it's good to come home again.
Yes, it is. Thank you so much.
Of course, Michele Schneider from MarketGauge.com. Thank you. And for more information from our Chief Investment Office and all of the views coming out of UBS, you can visit our main website, ubs.com/views. And you can also follow us on social media, LinkedIn, Facebook, Instagram, Twitter, plus check out all our past UBS Trending episodes on demand. And as always, if you have any questions about your portfolio, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everyone, and remember to keep your eyes on what's trending. We'll see you soon.